Okay, Year 11 accounting students, here we go with exercise 8.4. Another little background shot of my brother's place in Bali. Oh, I so wish I was there. Okay, here we go with another narrative version. When I say narrative, it's everything's written out in words rather than you going through and ticking off debits, credits from the bank statement against your accounting records. So this one is similar to 8.3. So all we've got to do is do the adjustment to the accounting records this time and the bank reconciliation records. So you remember on the last one we had some journal extracts. Well, this time there is no journal extracts. They've actually already gone to the end game in terms of your cash receipts and cash payments. So we're going to alter them on here. That's why I've left a couple of spaces for the items that affect and change cash receipts and the items which affect and change cash payments. All right, so again, the most important thing to do is to get your balances correct. So we go to the pens. So what we're after is the balance here and the balance here. They're two very, very important figures before you start any bank reconciliation process to get the right amounts to start with. Otherwise, you're never going to balance, are you, if you get the wrong figures as the opening or closing balance over here. So this is your opening balance. This is your closing balance as per bank statement. So you just read the question and you're looking for words which say balance as per bank statement, right, or balance as per cash records. On the 1st of November, so that's the start of the month. So that's probably hinting at this one here. The record showed a positive bank balance of $2,000. So there we go. That's the one that's going to go in there. Right, the balance at the 1st of November. Done. Then we jump to the second statement there. The firm's cash journals showed a total of $27,400. So your cash receipts at the start were $27,400, and your cash payments journal total before we make any changes is $29,500. Right, so we can plonk those two figures in there. All right, then we jump down to the next part, which says the bank statement. So here we go, the bank statement. So once you see the words bank statement, you know you're going over to here. Showed at the 30th of November. So again, there's the one at the end of the month. That sends you to this figure. So the end of the current month. All right, sometimes they might give you the end of the previous month up here. They could have said the 31st of October. That's the same thing as saying the 1st of November because that's the last day of the previous month. So don't get tricked by that. All right? So just look at the dates. So if you're doing November bank reconciliation, there's an October figure over here. That will still be your opening balance because that'll be the 31st of October. But if the bank statement gives you a balance, then it's always going to be the last day of the month. All right? So it is 4435. All right? So here we're going now with the debit opening balance. 4435 debit. Right, so that is the same thing as an overdraft. Right, so that's an overdraft. Get me out of the way there. So that's an overdraft, right, or a current liability, and that will impact on what we add or subtract over here. Right, so what are we going to do in terms of adding or subtracting? We've got a couple of choices, and I'll go through both. All right, so we go down now, and we've got the transactions. So these are the items which we need to work out that go into the bank reconciliation statement or into our accounting records. So those items we don't know about, that is the business, the cash journals, they are items that would have been on the bank statement which we need to add in. All right, so which ones are they? So let's just highlight those. So a check for 875 and check has not been presented. So the bank doesn't know about those, so they don't go into our accounting records. A check from a weed for $484, including GST, has been debited on the bank statement. So it's gone on the bank statement because it's dishonoured. Therefore, we won't know about that. Right, so let's just put a little X beside that one. We need to put that up into our accounting records. Interest of $245 has been credited in the bank statement. Right, so that's on the bank statement. Therefore, we won't know about it. Put an X beside that one. We need to add that one in. 6970 banked does not appear on the bank statement. So it doesn't appear on the bank statement, so it needs to go over here. Right? So it's not a change to our records. We've banked it. It just doesn't appear on the bank statement. Check number 8778 for 78 has been wrongly entered in the cash payments journal as 87. Right? So this is an error. So we've actually processed it for $87. When in fact the bank processed it for $78. So we've got a mistake there of $9, which we need to adjust. Right, so the check for $78, we put it through as a cash payment for $87. So we've actually increased our payments accidentally by $9. So we need to fix that and get that $9 error out of our payments. Bank fees and charges were debited on the bank statement, so they've gone through, but we don't know about them. So we need to make those 4 changes. Right, so the ones we don't change is the one in there, in our accounting records. That's got to be changed on the bank reconciliation. That's a deposit not yet credited. And those there, which are your unpresented checks. Right, so they're your UPs. They will go onto your bank reconciliation statement, and there's your deposit not yet credited. That will also go onto your bank reconciliation statement. Right, so what we've identified is those items that we wouldn't have known about until the bank statement arrived. We have to add them up in here, and we've identified those items that the bank wouldn't know about, and they have to be included in the bank reconciliation statement. Right, so let's go ahead and process it. So I think I might be able to do a little bit of adjustment there to make this a bit easier to read. So I think I can knock those 2 out comfortably. Alright, so what we want now is to change these. So of those ones we put an X beside, which ones would change your cash receipts? A check that's been dishonoured. Right, yes, it will. Right, that is the one where we've banked something, but the customer doesn't have any money in their bank account. Right, so they're going to take it out. So we can take the check from a weed, right, and that will be a dishonoured check. CHQ will do for a weed. And that is a negative number. Right? So that's negative 484. All right, so that's going to reduce your cash receipts total. We go down to the next X. Interest of $245 has been credited. So credited means it's making your bank account go up. So we need to add that into our interest. We need to add that in because that's going to increase your bank balance. Right? So there's your adjustments for your receipts. So we add those 3 up. So that's your new receipts total. Now we do the payments. So we've got, not the dishonoured check, we've got the last 2 here. So we've got a check 8778 has been wrongly entered in the cash payments journal as 87. Right, so when we wrote it in the cash payments, we put it in as $87. When the bank processed it, they processed it as 78. So we need to adjust that. So it's a error on check 8778. Right? So is it going to increase or decrease? Right? We've put in the cash payments journal for 87. It should have only been 78. So we need to decrease it. Right? We need to take out the $9 error. And then the last one is bank fees and charges, which also decreases your bank. and they amounted to $50. So that is a total payments adjustment of now 29,541. We've got the opening balance still there. We can now add up those two. That was a surplus, and remember to subtract the payments. So we'll go equals $2,000 plus 27,161 minus the 29,541. So that's your new closing bank balance, and you notice it is overdraft. Right, so that is overdraft, or if you like, it's a current liability. Right, so what we want is to get negative 380 over here. Right, so as you may recall, we used to add deposits not yet credited and less unpresented checks. When you start with an overdraft, right, it's probably easier to simply to add the unpresented checks, because they are going to make that overdraft worse. Right? Once they are finally banked by the people you gave the checks to, they're going to make this figure go higher, right? Because we're currently in overdraft. We owe the bank money, so the more money that comes out, the more money we'll owe to the bank. Therefore, this figure will keep going up and up. Right? So when you start with a DR, you don't have to do it. You could do less unpresented checks and have a less rather than the add. Right? So that's the other option. You go less deposits not yet credited, and then work out whether you've got a surplus or a deficit before you decide are you going to add or less unpresented checks. As long as it's logical. Right? Am I trying to increase this balance or decrease it? So if I'm in overdraft, logically, when those checks are presented, they're going to make that overdraft go higher and higher. So we need to add. So we add in the two checks, number 8751 and 8763. So 8763. So I'm down here. Right? There's your unpresented. There's your two checks. 8751 for 2,300, and the other one is for 615. So they haven't been presented. Right? So I add those two together, right, because they are going to make your overdraft worse. Right? So we're still in overdraft, and a much higher overdraft. So obviously now the next one is going to be less, and we're going to less the deposit not yet credited. Because once this deposit is credited, it's going to reduce this overdraft. Right? So I currently owe the bank 7,350. If I suddenly deposit some money, it's going to reduce the amount that I owe. So you go down to find the deposit not yet credited. So we wrote out a receipt for 6,970. It will be inside that figure there. But it hasn't appeared on the bank statement yet because, the usual reason, we haven't physically been able to take it down to the bank yet. So now we less the 6,970. So 6,970. So we get the 7,350. We subtract the deposit not yet credited, and we get 380, which is exactly the same figure over here, but it's a DR, right? Which means it's overdraft. Right? So we've got a debit balance, so that's overdraft. So we've got negative 380 over here in your accounting records, which means it's a current liability. We've got a 380 DR over here, which also means it's an overdraft. Right, so that's the balance as per accounting records, $380 overdrawn, which matches what we've got over here. So again, we've got the reconciliation completed by doing the process of identifying what things would the bank not know about. And again, there are only two things the bank will not know about. Right? It will not know about unpresented checks or deposits not yet credited. In your accounting records, there are a variety of things that you may not know about. Right? But you're starting to see that they're generally in the same area of bank fees, bank charges, dishonest checks, loans, direct credits, and now you've got an error. Right? So errors also have to be adjusted here. There are no errors on the bank statement. Right? The bank doesn't make mistakes. Who would hope? In Year 11 accounting, right? The bank does not make mistakes, or in Year 12. Right, hopefully that was all clear and you totally understand that. If not, you can just drop in and ask any questions. Right? You have a go at that yourselves.